Nigeria has released new rules for digital assets, offering more clarity on trading in cryptocurrencies in Africa's most populous nation. This is from the Securities and Exchange Commission. It's published rules on issuance, offering platforms, and custody of digital assets for virtual technologies. Set it on its website. It classifies the assets as securities regulated by the SEC. Let's go to our guests who are going to be joining us to talk all things crypto. We've got Charles Okaformbah, who is the Chief Technology Officer and co-founder of Convexity in Abuja. Also joining us virtually is Karla. Let's see here. Karla Obakpolor, who is the founder of CryptoSmart. All right, thanks for joining us. Thanks for two of you joining us. All right, guys, I want to start with the SEC. Charles, let me come to you. Do you agree? What's your take on these new rules that the Securities and Exchange Commission has put in place for digital currencies in Nigeria?
Okay. Hello, Rutus. It's actually a welcome development, right? Because the DeFi space, that's decentralized finance, has always been like a wild west kind of thing. Take, for example, what is happening to Luna and the UST stablecoin. So regulation is welcome, right? It's good. But the problem with the present SEC regulation is that it is offering startups, right? Startups that have like been the guinea pig, trying to see how this space grows in Nigeria, taking the fall for anything that is happening in the space, right? And with what the SEC has come out to do, especially the registration fee that has been attached to digital asset providers, or if you want to offer a digital asset exchange platform, you need to pay like you need to have like 500 million paid up capital. You need to pay like 100 million for registration fee, 30 million, and so on and so forth. 100,000 again for your directors and all that. Now, if you put that with startups that have been tilling the ground for a very long while, you find out that they've already been cut out from the space itself, and leaving the more serious players like the banks or the registrars that are into stocks and all that to take over. The good thing is that it's definitely going to create business opportunities, right? But at the expense of startups that will not be able to afford this. And then the dangers that we should be focusing on is having foreign startups now coming in to take over the space, right? Because they will have the capitals and all that to do these registrations compared to local startups that I would have said the SEC created a sandbox, right, where they can explore, right, and do things in the space before, with the guidance of the SEC, right, before going mainstream, or just to show that the government is supporting startups that are in the space down here. But it's a welcome development, but there's a big but there that those in the industry are not too happy about with the SEC.
All right, Charles, we actually talked about this on our flagship morning show this morning, and Rufai made a point that bigger players, which is being said would be favored for this, are actually coming into Nigeria, partnering with local players. So do you both, and I hope Karla, your internet connection is a little better now, but do you both, what do you make of that argument that for the larger players that can afford 500 million naira as paid up capital, can afford all those fees that we just put up on the screen, that they will partner with local players in the community here, whether it's Crypto Talk, whether it's Convexity, to be able to come into the space to offer an initial coin offering or whatever other crypto assets that they have? What do you make of that?
Okay, that even before now we've seen local players, but maybe not formally, but you have the local guys down here pushing this platform, right? The biggest we know, right, that is in the space is actually local guys that made it what it is. So most of these guys, they come here, they tap into our space, right? And then they get people that will push the market for them. And aside that, nothing, right? It's more like these guys are just made figureheads or are just being paid to carry out this service. But there is no law. I don't think this regulation covers that you need to like maybe give 10% or 30% to local players or you need to partner with local players and this is what you should be giving to them. So I don't think there's any law like that. If there is a law like that, I believe that would have helped to cushion whatever is happening now or the rancor that we are seeing in this space. And this local guy, these international guys, if they are coming, definitely the funds that they will be getting from the market is obviously going out, right? There is no compete, right? The local guys will find it hard to compete with the guys with the big money and all that. So I think that's one area that SEC didn't really look into properly in order to guide or protect the local startup and the local talents that we have down here.
All right, we're going to continue the conversation after the break. There's still a lot to discuss with our panel here on these new rules from the Securities and Exchange Commission, plus the very huge 44-nation financial inclusion conference taking place in El Salvador that has adopted Bitcoin as its currency. So do stay tuned. We'll have more after the break on the Global Business Report on the Rise TV. Welcome back to the Global Business Report on the Rise News. We continue our discussion on the Securities and Exchange Commission in Nigeria releasing new rules on digital currencies in Africa's largest economy. We have Charles Okaformbah, who of course is the co-founder and CTO, Chief Technology Officer at Convexity, Karla Obakpolor, founder of CryptoCurrency. We're also joined by Peter Iyen, who's a crypto trader in Abuja. Okay, Peter, good to have you with us. So we're just talking about the new rules the SEC has put out for digital currencies. I want to get your take as well. Charles and Karla have already said they have a few issues with the amount of paid up capital and other fees that will have to be paid. Although from the SEC's point, I think the SEC is looking at this from a risk management volatility perspective. But how do you see things, Peter?
I think I would probably agree with the previous speakers as well that the crypto space in Nigeria is largely being driven by young people, and given the rules and regulations that the SEC has rolled out, it's going to be practically impossible for the young under 25, under 30 person to meet those regulations. I mean, first things first, most young people are starting their interactions with the regulated financial industry with cryptocurrency, and they might not be used to raising capital or, capital formation and all of that, which, given the rules, they would need to do. They would need to raise, because it will be difficult to raise the kind of capital the SEC has put up as an individual. So, yeah, I think the SEC's rules really do not take into cognizance the fact that this space is being driven largely by young people. Now, having said that, I also understand where the SEC is coming from, in that they are, as you said, trying to risk management and protect the general public. So I think they should probably, and I think they probably will, they probably should create some sort of junior market or some sort of junior set of rules for young startup entrepreneurs that would, guide them and pilot them, into becoming bigger businesses and, meet the more stringent rules.
All right, let me ask the panel here. Karla, I hope we have your connection is better. I want to ask you the same question for all three. Does this put the SEC at odds with the CBN? Because we know the CBN has restrictions on financial institutions essentially completing transactions or facilitating transactions for cryptocurrencies in Nigeria. So with the SEC stepping forward here and trying to take charge and saying that these are securities and it's their, their purview to review these items, what do you guys, Karla, let me start with you. What do you think this does as far as the CBN is concerned?
Yeah, definitely they'll need to review, because I don't see how both organizations can work independent, like representing independently of each other. So yes, there has to be some sort of middle ground. They would break. Yeah, SEC is more, if I were to put it on a regulatory level, SEC has they put more authority, jurisdiction in controlling how crypto operates in Nigeria more than the CBN would. So yes, they would have to find a middle.
All right, Charles, what do you think?
The SEC will want to just come out like that and send out a regulation without interfacing with other agencies. Even recently, we've seen the FATF, that's the Financial Action Task Force, mandating countries to try and implement the travel rule protocol for crypto or digital assets and players. And this also involves transmitting digital asset from one country to another. And if this is not done, Nigeria, in a way, will drop in rating. And the central bank is kind of like involved in all this, right? So if the central bank is involved in all this, I believe very soon, most likely, we'll hear a positive feedback from the central bank, because these are funds, right? And these are monies that will be paid into bank. I think what the government is trying to do is just regulate the space. And after the regulation, then maybe we'll see the central bank coming up with an announcement of the ban, as closing the ban.
All right, great stuff. Peter, let me come back to you. Can you give us a quick definition of stable coins and what you make of the wife of Terra USD, the founder, Do Kwon, actually going into police protection in South Korea with the drop and I guess people losing money? Somebody broke into their house and was asking for him. Can you give us a quick definition on stable coins, Peter, and what we've seen in the past week or so?
Okay, yeah. Stable coins are tokens, or digital tokens, whose prices are fixed or pegged to the price of a real-world asset. So, with the example you're giving, Mr. Do Kwon, and the UST Terra stable coin, it was pegged to the dollar. So, but then it was pegged to the dollar, but it's not only stable coins can be pegged to the dollar, the naira, the yen, or any other currency, or any other asset really, as long as it's pegged to that particular asset and its price is meant to mirror the real world prices of that asset, then it's a stable coin.
This collapse that we've seen, is it going to affect, actually, thanks, Peter. Karla, let me come to you. Does this collapse of Terra USD, I think linked to Luna or so, that depegging against the dollar, because there was supposed to be a 1-to-1 ratio. Karla, do you think this has a ripple effect on the rest of the crypto ecosystem, the virtual currency ecosystem?
Yeah, the ripple effect, yes, but as to the largeness of that ripple effect, not really so much, because we need to understand what USD is. USD is an algorithmic stablecoin. Sorry, algorithmic stablecoin. There are different types of stablecoin. There are fiat-based stablecoin, there are crypto-based stablecoin, which are mostly found on DeFi platforms, and then there are algorithmic stablecoins. Now, understanding how algorithmic stablecoins work, their greatest problem is volatility, and so this protocol try to kind of like make up for that volatility by incentivizing people basically to arbitrage the up and down movement of the stablecoin. Now, if you follow the Luna USD crash, token should keep the peg of this stablecoin at $1. But the essential problem is there really wasn't any collateral for the stablecoin, and that's why you find that most centralized stable way more stable than coins like UST. And it's not the first. We've had bases. We've had this stablecoin on Ampleforth. We've had algorithmic stablecoins fail over time. So we understand the ecosystem. We understand the mathematics behind this, because it's basically maths and economics. So when you understand it, you know that the market generally goes off of this. So this is happening now because of, there are a lot more people now in crypto. People are getting back crypto, so it's like new to them. We've seen this happen before with some of these stable coins that have called. So it's not really going to last for long. Most of us in the crypto space, we know how to get out of this. So definitely we're going to get out of this. It's not for the ripple effect wouldn't be so much, in my opinion.
All right, good stuff. Thanks, Karla. Charles, I think I'll wrap up with you. This conference that's taking place in El Salvador, apparently 44 nations that are going to be there talking about financial inclusion, El Salvador adopting Bitcoin, and so on and so forth. I think according to the list of tweets of countries, the Central Bank of Nigeria is there, Ghana, Egypt, so many countries. What do you make of this conference? You think anything good is going to come out of it after today?
It's a good one, right, that nations are paying attention now, the possibilities of Bitcoin itself. I know that the country, that's Nigeria, recently there was a national risk assessment that was done on the effect of digital asset trading and all that. So I think the country is preparing the ground, that's Nigeria, preparing the ground for the inevitable, and that inevitable is that digital asset or crypto or Bitcoin has come to stay, and how to mitigate against fraudulent practices are there, right? I think there will be something positive. El Salvador is, countries are watching El Salvador trying to make or see what will come out of their marriage with Bitcoin and then go from there. And remember, Nigeria, we already have a CBDC, the e-Naira, right? So the effect of CBDC to the crypto space or the cryptocurrency trading is yet to be felt. But I believe as time goes on, we'll see how that is going to turn out.
Fantastic stuff. My thanks to you folks from the blockchain crypto community from joining us to talk to us. Peter Iyen, crypto trader in Abuja. Karla Obakpolor, who is the founder of CryptoSmart, and Charles Okaformbah, Chief Technology Officer, co-founder of Convexity. Thank you all for joining us to talk about the SEC, the conference in El Salvador, and all things virtual currencies. Interesting space.